thank you so much for joining the March Cincinnati MBEIC monthly meeting. This month, we're going to talk about your 2020 tax return. Preparing taxes might be a little different this year. We've had loans, we've had grants, we've had home offices, furloughs, revenue losses, and more. Today, we have invited two experts in tax accounting who process taxes for businesses small and large, who are going to answer our many, many questions about the 2020 taxes and how we move forward for 2021 as well. I am Crystal Kendrick. I forgot to tell you that. I am the MBEIC Vice Chair, and I do the paperwork of processing all of these meetings. My leader, the MBEIC Chair for Cincinnati, is none other than Mr. Carl Satterwhite of the RCF Group. And I have to tell you that I just cannot thank Carl enough, because I have these grand visions and no contacts, and he makes it happen every time. He calls every person that I need to be a part of our session to make these sessions win. And so every one of the tremendous speakers we have are thanks to Carl, and he never tells me I get on his nerves or anything. So I really appreciate your help and support and encouragement to get this information out to our members. We're going to have our welcome introductions. Our topics today are bookkeeping tips to prepare your taxes, mistakes and deductions small business owners miss, strategies to reduce your tax burdens, and then things we can consider for 2021. As always, we will end our session with remarks and announcements. During the session, we ask that if you're not speaking, if you wouldn't mind to put yourself on mute, so that we don't interrupt the speakers. If you have a question, you're more than welcome to put it in the chat, raise your hand, or turn your mic on and ask the question, because we want you to have as much information about our taxes as possible. And then in the end, we'll all come together, talk about some of our wants and needs as time permits, and some announcements and things that are happening in the Cincinnati small business community. So without further ado, I would like to introduce our two guest speakers. Our first speaker is Alex Alvarez, MBA, CPA. He is a tax accountant and senior partner at Business Management Services, a certified minority-owned business here in the Cincinnati area. We also have Mr. Tony Schweier, CPA, CEPA. He is a shareholder at Clark Schaefer Hackett. So welcome, gentlemen. And we'll go ahead and get started with the questions. You ready?
Fire away.
So the first question talks about, of course, just 2020. Many small businesses are preparing to submit our 2020 tax documents. How is 2020 different than previous years? And we'll start with you, Mr. Schweier.
Oh boy, how is it not different? So let's start, because there's a whole host of things that small business owners, and family members need to think about, and particularly in light of the American Relief Act that will be signed into law later this week is making some changes retroactive to 2020. So one, if your business received a PPP loan, make sure you're properly accounting for the PPP loan. If it hasn't been forgiven yet, it should continue to be on your books, but you get to deduct all the expenses that were paid with the PPP loan. If you got an EIDL loan, those were originally going to be taxable. The law that was passed in late December has now made it clear that EIDL loans are income tax free. If your business is claiming the employee retention tax credit, make sure you're properly accounting for that. The employee retention tax credit is taxable, and even though you would not have gotten a refund yet, since it is taxable, they want that claimed on the 2020 return, since the credit refers to those years. So that's a little bit of an anomaly. The American Relief Act that's going to be passed, all of us have had either immediate family or extended family who have, through no fault of their own, received unemployment benefits. Historically, unemployment benefits were fully taxable. With the Relief Act that will be signed into law later this week, the first $10,200 of unemployment benefits are going to be income tax free. So make sure that you do not have family members who have filed a return already, paid tax on all of their unemployment benefits, because now they're going to have to go back and amend and make the first $10,200 of that tax free. I'm sure there are other things, but those are the things that immediately jump to mind that are different in 2020. And there are more changes coming in 2021 that we'll talk about at an appropriate time this afternoon.
Okay, so the PPP loan, if someone has applied and received a PPP loan, but their forgiveness has not been processed, just because their bank hasn't gotten to it yet, or their financial institution hasn't gotten to it yet, should they hold off on filing their taxes? Should they ask for an extension if necessary, or should they pay the taxes and try to get it back later?
No, since the PPP has now been determined to be tax-free and the expenses paid with the PPP have been determined to be fully deductible, what we're advising clients, if you haven't gotten forgiveness on your 2020 business return, leave the PPP as a loan payable. You still get to deduct all the expenses you paid with it. In 2021, when you get forgiveness, the loan's just going to come off your books and you have tax-free income. So no reason to delay filing it, even if you haven't gotten the PPP loan forgiven.
Okay. Now, the employee retention tax credit, can you tell us who qualifies for that and how much it might be?
Well, it's a big number. The question is whether or not you're going to meet the criteria. So this is going to get really confusing. So let me walk you through it.
Okay.
If you had any calendar quarter in 2020, when compared to the same calendar quarter in 2019, that your business's revenue was down 50% or more, that's your first hurdle. You would be eligible to claim the employee retention tax credit. Now, so then the next test is you look at each employee in each quarter where you had a 50% or greater decline, and you get to count the first $10,000 of wages per employee, but you have to exclude any wages out of their first $10,000 per quarter that were used or will be used to obtain PPP loan forgiveness. So let's use an example. I've got 5 employees. They each made $10,000 in a quarter. That's $50,000, but I'm going to use $25,000, $5,000 a piece, as part of my PPP loan forgiveness application. Those wages are excluded, but the remaining $25,000 would be eligible for the credit. The credit for 2020 is 70%. So 70% of the $25,000 in my example, the government will write you a check. You have to file amended 941 forms. Those are the quarterly payroll tax filings, but you would have 70% of the eligible wages you will get back as a tax refund, cash in hand. Now, the 2021 rules are more liberal. So if your Q1 or Q2 of 2021 compared to the same quarters in 2019 are down 20% or more, you're now eligible for the credit. But now the credit is only 50% of $10,000 of wages per quarter per employee. So the credit's not as big in Q1 and Q2 of 2021, but the threshold to qualify for taking the credit, the hurdle's significantly lower. And they put a special provision in there. If Q4 of 2020 compared to Q4 of 2019 is down 20% or more, that will qualify you for Q1 of 2021 automatically. You'd have to be at the 50% threshold for Q4 of 2020 to qualify. But if you're down 20% or more in Q4 of 2020 to 2019, that would qualify you automatically for Q1 of 2021. So the rules on this ERTC are very confusing, but I would tell you that I delivered yesterday to a chain of reception halls. I delivered employee retention credits totaling about $174,000. So there are some big refunds out there. So it really applies. You know, the best place you're going to see applicability is probably restaurants or other businesses like my reception hall chain, businesses that have employ a lot of people. Obviously that helps, but even for a 5 or 6 employee operation, a 70% or even 50% credit's a big number.
Okay, so Tony, you rattled off quite a few numbers, and I think some of us were a little bit confused, but at the end of this, after this session, can I work with you to just get a list for people to know even if they qualify? Like
Crystal, if you said, I have a whole PowerPoint presentation on this that runs about 20 PowerPoint slides, which you do not want me to put up during this meeting, but no. I will. You tell me what materials you would like, and I will forward you those PowerPoint presentations, and you can forward them out to anybody you would like to.
All right. So team, know that we're going to find out. We're just going to get the list of the qualifications. If you feel like you qualify, then you can contact your accountant, bookkeeper, Mr. Tony, Mr. Alex, to move forward. All right. Because the percentages were a bit much, but I do think it's important to know that if you qualify, we can easily do our comparisons for the quarters that matter, et cetera. And then we can turn it over to the appropriate people. But I do think it's important to know that. So thank you so much. Mr. Alex, is there anything that you would like to add, especially for really small businesses from 20 to 20, for the 2020 taxes that you would like to add to what Tony said?
Tony's comments are all valid and are true. One thing that I would just like to emphasize to what he said is that you have got to do the record keeping and comply with the regulations. If not, I tell you, you send your application or your PPP forgiveness, they really double check them. They double check them, and they would even ask copies of your bank statements. I would like to emphasize to all small businesses, the large ones are automatically doing it now. They are now requiring the monthly bookkeeping and record keeping to show that you are really doing it. It is not only by quarter, they are asking now the monthly bookkeeping, the current regulation that I am seeing, they are requiring that there should be record keeping. And in the end, it is record keeping that is going to be the basis of whether you're going to comply with the rules, get the tax credit, get everything, all the things that Tony have said. And they are very, very strict now than before. So
they're clearly overreacting to the amount of fraudulent PPP loans that have been filed, and the compliance burden they're putting on legitimate businesses is cumbersome, to say the least. And I would tell you, as to that employee retention tax credit, there are firms out there that are, it's outrageous, but they're charging 15 to 30% of the credit they generate as their fee. Do not. It costs nowhere near 15% of that credit to do the calculations. Do not have somebody do that. I mean, you are much better off working with your existing advisors. Once you know you've passed the hurdle, you don't need to be paying somebody 15 or 30% of the credit for them to file the paperwork for you.
Thank you. Thank you for that to both of you. Okay, let's move on to losses. Some of us unfortunately did experience losses. What losses can business claim when filing 2020 taxes that maybe they weren't eligible for or widely used in previous years?
there are no losses that are no expenses that are new in 2020, but here is what's new. There used to be a rule that you could carry losses back or you could carry them forward, and it was you had to elect out of carrying them back if you wanted to only carry them forward. The Trump administration at the end of 2017 passed a tax law that eliminated the loss carryback rule. Well, as part of all the COVID relief laws that have been passed, they've reinstated the loss carryback rule, and it's now a 5-year carryback. Now you got to go back to the 5th oldest year and then come forward. But for people who had business losses in 2020, to the extent those losses are greater than all their other sources of income, and so they have what we refer to in our industry as a net operating loss, the people ought to realize they've got a chance to carry those losses back, because 5 years ago they may have had significant income and they could carry those losses back. And then, that if it's not used up in the 5th oldest year, then it can go to the 4th oldest year, the 3rd oldest year, et cetera. So before you automatically carry the losses forward and elect out of the carryback, make sure you're looking at the 5-year look back and seeing if there's dollars to be able to get, because again, those are dollars you can get an immediate refund on once you file the carryback claim. So I would think that would be a significant opportunity for businesses who suffered losses in 2020.
Thank you. Is anyone else learning anything? Because I'm writing notes, I'm trying to ask questions, I'm trying to pay, I'm all over the place here. This is some good information. Can anybody else learning anything? I can't see everybody, so maybe you can put it in the chat. Okay. Mr. Alex, did you have anything to add to that, or you want me to go to the next question?
Well, the net loss carry back and carry forward is a very good point to just emphasize Tony's point. If you had net losses that you had in the past few years because your income is higher than $150,000 or more, where your NOL, that is your net loss carry forward, net losses in your business, especially if they are in rental properties, they are limited or you cannot deduct them. They are frozen because you cannot deduct them because your income is very high. It is time to take a look at them again if this is going to be able, if you would be able to deduct it now that the rules are loosened up. Okay, a lot of people might just say, hey, you know what, it's same as before. There is a change, take a look at it. Talk to Tony, talk to your CPA, and have them take a look at what your loss carry forwards in the past, if you can take it this year or carry it back.
Okay. All right. Mr. Alex, I'll start with you on this question. How do non-payroll payments to employers and/or employer-paid costs associated with working from home affect small business taxes? So some of us just kind of gave some stuff to our employees. I don't know. And it was just a tough time, and everybody was just trying to get through it. And we either paid some bills or set up internet or bought some office equipment for home or whatever it was. Are any of those expenses deductible, or should they be noted in our taxes differently?
When you say non-payroll payments to employees, or non-payroll payments is Schedule C. That is when they get a 1099 and EC, non-employee compensation. When they get a non-employee compensation, they do not become an employee. They are already a subcontractor at that time. If they get a 1099 NEC or miscellaneous income, then they are entitled as a Schedule C or a business, And so they are going to have a gross income from the subcontractor income, and then they are now subject, or they can claim all the business expenses that is regular and ordinary in their industry. So any expenses that is related to their business is tax deductible. Unlike if they get a W-2 form, they cannot have those expenses.
So, I mean, some of us, I mean, I don't know how it would be classified, but I do know that employers paid for devices, printers, internet. I mean, should those be like reimbursable expenses? I
If
mean, we had to do something to be able to let them work from home.
if they
Crystal, I'll tell you what I think the practical answer is, because we provided monitors and laptop docking stations to our employees. We viewed those as a company expense. We provided them to our employees. It is not taxable compensation to our employees. And I would tell you, we are taking the deduction at our company level for the purchase of that equipment, even though we allowed our employees to take that equipment home. And I would make the same argument, in order to allow a person to work from home, if they needed an internet connection, I'd feel better about it if your business were paying for that internet connection directly, rather than giving the employee money and having them pay for it out of their pocket. But as long as the employee submits some statement or expense reporting form that says, here's my monthly internet charge and you reimbursed me for it, I feel confident that's a legitimate business expense. We are letting our employees submit a monthly data charge of $75 per employee per month, right? To cover internet, to cover their iPhone, to cover whatever data charges they need to cover. And I think that's personally, I have no problem that that's absolutely appropriate. Alex raised a good point. Payments that you've made to employees that you did not run through payroll, I think there's you could be challenged as to whether or not that's deductible. I think the Internal Revenue Service would likely view that as a gift, and likely would not agree that it should be deducted by the business.
So, and I didn't do this, but I've heard that companies have, like, we're going to give you $500 and you go out and buy a chair, a desk, a table. I mean, I don't know who did that, but I've just heard that story.
I would view that as akin to us providing the monitors and the docking station, though. So all I'd want is a statement or some other documentation from the employee saying, I spent the money as you directed. I don't think you're going to get a lot of challenge on that. I personally don't view that as a difficulty.
Okay. All right. I think we're
as opposed, Crystal, to somebody you just sending $500 to an employee and saying, I know you're struggling and I know we've had to furlough you or whatever, and you send them a $500 check for them to do with as they see fit. I think you're going to have a problem with that being deductible.
Oh, yeah, no, I was just thinking about a lot of the expenses that a lot of people went through just to enable their employees to work from home and or work remotely or come and go or however it was. And I think you explained it well with the reimbursements or the data charges or something to that effect. I don't know if anyone else has any questions on that topic. We can let them know, but I think we're pretty clear on that. All right, so the next question is, many business owners also assisted family members and contributed to community efforts. How do those payments affect their 2020 taxes? And considering that a lot of people are either sole proprietors or they file a 1040 that includes their business and their personal taxes. So that's kind of where the question was coming from. I just didn't imagine that somebody who was operating an S Corp or a C Corp and had, that just receives a W-2 who gave money to their family could file that. But whatever,
Alex, your thoughts?
This is from your heart. Because you said assisted family members, assisted help, that is not business tax deductible. If you had made that thing into something else than assisted, then I would categorize it as something different. But the word assisted is controversial as business deduction. I will not be very business friendly on that.
Okay.
Thoughts?
Now, what about contributions to charity?
Contribution
Donations?
becomes a donation.
To
Okay.
qualified charities, they've put in a new rule. It's not very helpful. For people who do not itemize, you get a whopping $300 tax deduction for the first $300 of your charitable contributions. To get a deduction above that for your charitable contributions, you would have to itemize, and not everybody's able to itemize for a variety of reasons, right? Now, I always want to be helpful to people. So let's think about let's go back to the Crystal, you assisted family members and advanced them some monies, right? I'd be really inclined, and you'd have to have the proper paperwork to document this, but I'd really be inclined to think about, could we document that those monies were a loan? And when your business picks up in 2021, could you ask those family members to come back to work and work at your place of business nights and weekends at some reasonable hourly rate and do some work for you and burn off the loan that way and turn that money into a tax deduction? Now, that might not work for everybody, but look, if you just might want to think about, is there a way, a legitimate way to hey, I want to assist family members, but there's an opportunity to turn this assistance into a business deduction, because I agree with Alex. Otherwise, it's not deductible. So they'd have to be doing real work, and it have to be paid at a reasonable rate. We shouldn't be paying somebody $100 an hour to mow the lawn, but as long as you structure it reasonably, there may be a planning opportunity there, depending on the amount of assistance you provided to a family member.
Crystal, the other thing that could be is that that you have got the word in here, contributed. That is a donation.
Right.
You make into advertising for that community. It is now advertising. You are not going to contribute to that, but you're going to pay for their advertising, and you are going to pay for your advertising in that community. For example, if my business, I am going to advertise my company, or Tony will advertise in community over there, then he is going to be paying his advertising to promote his business or my business in that community. That is another way of just helping them to buy the advertising. But you say contribute, oh God, that is donation.
Yeah, contributions make us all feel bad, or feel good. But Alex raised an excellent point. You are much better characterizing something as advertising expense or sponsorship expense rather than as a charitable contribution. Contributions actually come with more restrictions on deductibility. Sponsorships and advertising do not have similar restrictions. So you want to look at it from a sponsorship or advertising perspective.
Okay. Ooh-wee. All right, this is some good stuff. Somebody told me about something called a pass-through business tax. Anybody know what that is?
Crystal, you stumped me on that one. The only thing I can think of is if you own a partnership, you own part of a partnership or part of an S corp. you own a pass-through entity. If you are passive with respect to that entity, in other words, you're not actively involved in day-to-day or week-to-week operations, but that business reports income to you of a certain level, that income could be subject to the Affordable Care Act tax of 3.8% that an active person in that business would not be. So let me give you an example. Brother and sister own a business. Sister's not active in the business at all. It's a jewelry wholesaler. Brother runs the business, but they inherited from mom and dad. Sister always gets 50% of the profits. It's just what mom and dad asked son to do. Well, sister, because she doesn't work in a business, is passive. So the dollars that are allocated to her, the income allocated to her and distributed to her as a passive investor, makes her subject to the 3.8% Affordable Care Act tax that her brother, also 50% owner of the whole business, but because he's active in the business, he's not subject to the same tax. And that's where our tax law, frankly, gets confusing. You have two people in essentially identical economic circumstances paying different kinds of tax. So I assume that's what they're talking about from the pass-through tax.
That sounds like a good answer to me.
It's the best I got. That was the only question you sent out in advance that stumped me, so I had to come up with an answer.
All right. What strategies should small businesses consider now that the stimulus bill will pass this week or in the coming weeks? Alex, anything that small businesses, a lot of businesses in the MBEIC are large, but many are sole proprietors, fewer than 10 employees. Is there anything that they should think about as they move forward?
I do not know yet how they are going to pass through this new thing. I don't have anything to say about this new thing yet because it's not passed yet. All I heard are hearsay.
Okay.
Have anything new on that one, Tony?
Yeah, so here's an interesting one. First of all, if you've got anybody, either you or any of your family members own a restaurant, buried in this bill that's going to be signed into law this week is the Restaurant Revitalization Fund. Now, wait until you hear this. They have set aside $28.6 billion for this fund. They are going to reimburse businesses up to a maximum of $10 million for every dollar of revenue in 2020 that is less than 2019. So let's just take a really simple example. My restaurant in 2019 did $1 million. My restaurant in 2020 did $200,000. You're going to have to apply to the SBA, but the government's going to write you a check for $800,000. The revenue shortfall you experienced. Now it gets better. Priority is to be given in the first 21 days after they roll this program out. I'm reading from the sheet I got today. They are going to, for the first 21-day period, the SBA shall prioritize awarding grants to small business concerns owned and controlled by women, veterans, or socially and economically disadvantaged small business concerns. So if you've got anybody who you know that owns a restaurant, you need to make sure that they're paying attention to this. Okay, this is an economic windfall, and you can do this on top of getting PPP Loan 1 and PPP Loan 2. You can get this on top of claiming an employee retention tax credit, and this is non-taxable money. They are trying to salvage the restaurant industry. Okay, so this is a big deal.
Yeah, Carl, it sounds like we might need to put something together for that as soon as we know something. Tony, can you just keep us abreast as to when you think we should start telling people and sharing it? Because that's a pretty big deal. I'll
send you the 2-pager, Crystal. Just ping me an email reminder of the stuff you want sent over. I've got a 2-pager that came out from the National Restaurant Association. I got to tell you, because I like to think I'm pretty up to date on tax law. I didn't realize that was in there. And it's
Tony, gotten that yet.
$28.6 billion.
Wow.
And they've specifically said publicly traded restaurants do not get it. But if you own a franchise, you can still get it. So think McDonald's franchises, think Skyline franchises, think so just because you own a franchise doesn't mean you're disqualified because your parent is a publicly traded company, as long as you're not publicly traded. So they're really trying to revive the restaurant industry in a big way, because the other thing they've done, looking forward to in 2021, now in 2022, meals used to be 50% deductible. For 2021 and 2022 only, meals at a restaurant are 100% deductible, but entertainment is not deductible at all. So the tax code is saying, don't go to a sporting event with a client or a prospect, take them to breakfast, lunch, or dinner. You'll get 100% deduction for eating at a restaurant. We will give you nothing for taking them to a professional or collegiate sporting event.
Wow.
So they're trying very hard to revive the restaurant industry.
They have anything like that for marketing firms? Just asking for a friend.
No, and they're not helping out public accounting firms either, and they're not helping out furniture distributors either. But if you can afford to dress like Carl Satterwhite, you don't need help. No. So, all right. But that's out there, and I think again, as you get into more of this, I mean, I don't know what else is in there. There's clearly they're clearly targeting certain industries. I think we've all heard that they're targeting help for the airline industry, but this is a big assist to restaurants. If we think of all the small family-owned restaurants that have suffered, this is an opportunity for them to get back on their feet. So they need to make sure that the minute that the rules are released about how to apply, that they're on top of their game.
Yeah, we'll stay on top of that, Carl, for our committee. All right. And like Alex said, I know people are coming and going through the session, but it just sounds like we just really need to be on top of our bookkeeping. I mean, many of us just kind of put papers to the side and send it to the accountant at the end of the year. And we just can't do that this year. If we want to be able to take advantage of a lot of these programs, we're going to have to engage with our bookkeepers and accountants more than once a year. We're going to have to really be on top of it, because when these programs open, you have to be ready. Am I right? You can't
that is absolutely true. You've got to be ready to hit the go button as soon as you can, because now that said, they've extended PPP Loan 2 till the end of June because there's not enough demand for the PPP Loan 2 program. Hamilton County still has grant money that has from the last COVID relief bill that they haven't been able to disperse all of it. So the difficulty is in identifying all the programs that are out there and meeting the qualification criteria. But there is money out there that's going unclaimed for lack of anybody applying for it. And unfortunately, there is no central location that makes it easy for anybody to figure out what they might potentially qualify for. But Hamilton County's got money they're literally trying to give away. It's typically targeted at small businesses, but you need, you're going to have to take it upon yourself to educate yourself. But I also think it's a year in which you need to be in regular contact with your advisory team, with your fellow business owners. Not everybody's going to know everything. So you're going to have to share.
Yeah, I'll talk to you a little later about those Hamilton County dollars. I'm sure we can make a telephone call to somebody to figure out who's eligible. I know some of us applied, some received 10,000, some, but that was almost, 8 months ago. So some people could really use another 10,000 to keep going. That would be helpful. So we'll make a point to follow up with that as well. Wow, I'm just in such awe of all this information. We have a few more questions. How are we doing on time? I want to be sure that we give everybody time to answer questions, but I want to talk about some common mistakes that small businesses make when processing their taxes or related to their taxes. So Alex, I'll start with you. What are some common mistakes that sole proprietors and LLCs make when filing or processing their taxes, or just related to their taxes, that you see all the time?
They don't have good record keeping.
Oh, okay.
a lot of them thinks that, oh, I love those people who has got their flash drives, and he says, here it is, and you look at them and then nothing makes sense. Or else they have got a bundle of papers in the box, and they says they expect you to do it all together without record keeping.
Oh, all right.
An effective tax preparer, you have got to have good records. To be able to do good accounting, the record keeping should be done on time and regularly. Otherwise, you are expecting us to do all of these things in the next hour or few days that we have in it. And that's the reason why we say, you bring all of those things to us, you're at the end of the schedule, or else we ask you to go somewhere else. They do not have good record keeping, and we cannot bring those things to an audit with the IRS like that. It has got to be organized. In
Okay. All right. Somebody told me, and I don't know if this is true or not, so I'm asking. I'm innocently asking. But someone suggested that when I set up my QuickBooks, my bookkeeping, that I use the categories that are aligned with the IRS forms, something so that it kind of matched it together, because originally I had words that I thought made sense, right? It made sense to me how I would categorize them. And I got a new bookkeeper, and she went through and redid them all and recategorized stuff, and perfectly aligned it with my with the tax form. And when my accountant received the taxes, he was like, hallelujah, what are you doing differently? And so I don't know if that is true for everyone, but it really did make a difference in how I was categorizing. And also when I went to apply for grants or PPP or whatever, it just really made it easier. Is that something you would suggest, or?
Absolutely. I mean, you can look at if you're a sole proprietor and you're reporting on a Schedule C, there's a Schedule C form, and you can look at the expense categories that are on that form. Set up your QuickBooks to match those expense categories. If you're filing an S Corp return, page 1 of that S Corp return shows you the expense categories. Match up your accounting system to match those expense categories. The other thing I would tell people to do, because it will help them remember, but let's say you're using Outlook. At the end of every month, I print off that month's Outlook calendar and I save it into an appointment book. Now, I realize that appointment books are a thing of the past, but you would be amazed at what you can remember because you taped that Outlook for the month. You taped that into your appointment book, and you can go back over the whole 12 months and say, hey, wait a minute. I did have breakfast, lunch, or dinner with this person, or I must have had mileage to this meeting because it at least gives you a chance to prompt yourself. You're still better off keeping it contemporaneously that day, that week, but you could help yourself by printing off those calendars at the end of every month. And I'll tell you what, I put everything on that Outlook calendar. It clutters my calendar, but it's a great memory prompter 3 or 4 months later, or even longer than that.
Tip of the day. We had two so far, gang. One is we have to keep that bookkeeping current and accurate, matched up to the tax forms. And number two, print off your calendar. And I'm just going to just put it right in with my monthly expenses that I give to the bookkeeper. Just put in, and even if I print it off each week or something, that to get the detail. But that was a good point. I'm trying to keep up here, y'all. Okay. Tony, what about S Corps and C Corps? What are some mistakes that they make when processing their taxes?
Well, C Corps, there are very few of those left anymore. I would say most small business owners should not be a C Corp unless they have significant debt and they are using the currently lower C Corp tax rates to pay down their debt. Most business owners, I would challenge them that they ought to be an S Corp rather than a C Corp. Now, if you're a C Corp, what you've got to, and you're not paying down debt, in order to avoid double taxation before the end of every calendar year, you've got to make sure you bonus out the earnings in the C Corp so they're not subject to double taxation. And I'm going to give you a hint, ladies and gentlemen. Wages is going to be the worst way to get paid in America pretty soon, right? They have to raise the Social Security tax monies that are raised. And so they're talking about raising where Social Security taxes will come from, and that's going to come from the wage base. So wages are going to be a lousy way to get paid. So you don't want to be in a C Corp format where you've got to pay out a bunch of wages. In the S Corp format, you have to pay yourself a reasonable salary, but all profits that you distribute to yourself in excess of paying you a reasonable salary are not subject to Social Security, and they're not subject to Medicare. So that's a much better way to get your money. You still got to pay the income tax like you would have had to pay on your wages, but you avoid Social Security and Medicare. So the two things I see S Corp owners doing is either pay themselves too little. That is a problem. The IRS will challenge you. Or they pay themselves too much in wages when it's like, look, once you've paid yourself a reasonable salary, the IRS generally doesn't challenge anybody who pays themselves the Social Security wage base, assuming that their income from the S Corp is greater than that number. And otherwise, if it's 50-50 in wages and distributions, I don't see it get challenged. So those are the watch outs, the baseline watch outs for S Corps and C Corps.
Okay. I am going to we have some great questions coming up. We have some more information, but our time is coming up short. So I'm going to do the best I can, gang. What deductions do small businesses routinely miss?
The stuff that requires them to keep their records current. So they don't save their receipts for meals. They don't track their mileage. I mean, it's you hate, do you write it down in the daytimer? Mine looks pretty cluttered, but I'll write up at the top of every day, here are the miles I drove yesterday to a meeting, so I can keep track of it, right? So it's the and you think about it, somebody says, well, that really can't add up to be that much. Well, over the course of 12 months, particularly as the economy revives, I think you're going to see a lot of people are going to want to meet in person. We're going to get back out into the community and meet face to face. The importance of writing that stuff down every day, the discipline of doing that will add up, right? That in my mind. So to me, that's the big one.
I remember, we have this new parking app. Well, it's not new anymore, but the parking app downtown. And when I set up the parking app, I just charged it to my personal credit card, not my business credit card. And every day I was going downtown, meeting with clients and I'm paying for all this parking. And my accountant said, well, where are your parking charges? I said, oh, it went over there. And it was almost $1,000 in a year of these parking charges that I wasn't calculating. So I take what you say in stride, and I am going to do better. I think some small businesses make too many mistakes of putting things on their personal accounts that could just in theory be their business account. So I don't know.
If you're gonna put it on a credit card, put it on the same one. So at least, even if it's a personal one, if it's on the same credit card month after month after month, at least you can take those monthly credit card statements and circle those expenses, which are business expenses, and capture those. Where people now start to put it across 2 or 3 credit cards because they're trying to get rewards points or this other stuff. I mean, you're just gonna, what you gain in rewards points, you're gonna lose in tax deductions.
Tony, stop dipping in my conversations and all the wrong things I'm doing here. All right. What can a small business do to reduce their tax burden? I hear about all this. If you buy equipment, this is the year to invest in technology, all these other kinds of things. And are there any things that we should be doing or not doing this year?
Well, wait a minute. Now I'm going to have a little fun with you, Crystal, right? Let's not spend the money that we don't have to, right? So let's start, because look, if you want to save 30 cents in taxes, pay Alex another $1 in accounting fees, right? You got a tax deduction for the $1, you save 30 cents. And Alex is 70 cents in. Nobody thinks it's a good idea to save taxes by paying Alex or I more money. No one in their right mind would think that's a good tax saving strategy, right? So let's not spend money on equipment unless it makes sense. Now, if whatever the expenditure is has a return on investment, yes, 2021 is a great year to buy equipment. It will be fully deductible. If you're in Kentucky, there's a small business tax credit that's available based on up to from $5,000 to $25,000 tax credit, depending on what you invest in. And again, your size. So there are things that are out there that are helpful. And then make sure, again, you're looking at the right structure. Ohio has the Ohio Small Business Deduction, where if you're a Schedule C or you own an S Corp or a partnership, the first $250,000 is not taxable to Ohio, right? So make sure you're taking advantage of that Ohio Small Business Deduction. Most people say, well, that's not a lot of money. Well, to have your first $250,000 worth of income from your business not taxed, and even if you're not making that much, if the first if you make 50,000, you don't have to pay tax on it. That's still a couple $1,000s in Ohio tax. So make sure you're taking advantage of the stuff that's out there. That's where most people miss it, just because they're not living it day to day. And so again, that goes back to Alex's earlier comment, be in some regular communication throughout the year with your advisory team.
Okay, so due to time, I'm going to stop us. There has just been so much information. My hand hurts from writing. I'm reading, I'm writing, I'm looking, I'm doing all these other kinds of things. I will definitely get with Tony and Alex to get some very important information. I think the whole 20-slide deck is valuable to me, but I'll let you decide what you want and what you don't want. But from the bottom of my heart and from the Cincinnati MBEIC, I'm just receiving text messages, chat messages, all kinds of things saying that this has been absolutely incredible, very helpful. People want to help coordinate information and get it out. I will share your contact information with the Cincinnati MBEIC in the event that somebody needs an accounting firm and wants to talk to you about those opportunities. But on behalf of myself, Carl, Christopher Shea, who's the Ohio MBEIC chair, and all of the members of the Cincinnati MBEIC, we thank you for your time, your expertise, your comedy, and all the things that went with your show. So thank you again. Ladies and gentlemen, I'm going to get us to just a couple more things that I wanted to share with you before we end out. We don't have a lot of time, but I do want to remind you that we do meet every second Thursday of the month. And as you can tell, Carl and I are working very hard to bring you sessions and webinars that will help you grow your business, help you network with the right people, help you achieve operational excellence. And we will continue to do that as long as you continue to come. If you have friends that you think need to attend, just have them come on board. We'd love to have as many people learn as possible. I know today we have representatives from MBEs outside of Cincinnati, and so you are always welcome to join us at any time. And if there's something you want our team to know about, then we can share yours as well. Another thing I just want to remind you of is that P&G is having a Supplier Citizen Virtual Summit on April 22nd. If you have not had a chance to register for that, if you don't have that information, I think it went out to all Cincinnati MBEIC members. If it has not, I will confirm and get that out to you as well. And then last but not least, I don't know if anybody receives my newsletter, but today I sent out a newsletter with about 4 or 5 new grant opportunities that are available for small businesses. I also sent you information about storefronts and selling. There's a nonprofit in OTR who is looking for minority businesses that want to come to their community. They will build out the space down in what they call Northern Liberties for you. If you're interested in doing that, by all means, let them know. The Findlay Market is looking for people to be in their space. It's actually quite affordable. So if you have a business outside of downtown or over the Rhine and you just want to, see what it would be to be down there, I think it's like $25 to set up shop down there. So if you or someone has a business that could benefit from that, we encourage you to do so. And I can't remember what else was out there, but I'll share that with anybody who wants to know where all of those grants are, because we share grants every time we send a newsletter. So that's all that I have. In case anybody, I'm going to look here at questions. Carl, do you want to take the mic for a second if you have anything to share?
Dude, I just really wanted to just thank Tony and Alex again. This is very timely, but it's very important. I think much of what you did today was show us as business owners what we don't know. So I think that if we only got out of this, that we need to get to our advisors and whoever is doing bookkeeping and our accounting work and get educated. I think we have to do that because not just this year because of the anomaly of COVID, but really that we understand every year. We got some great practical steps of keeping good records and other pieces, but specifically in this year, we have to have more attention. We can't just kind of pay, a fee and get this done. We got to make sure that we do this the same way we would drive our business success. So, I just thank Tony and Alex for sharing this wisdom. I know for them, this is what they do every day. So it may come across as a bit simple to them, but I'm sitting here just taking now. I'm thankful that I know them both, and I'm fortunate enough to be able to pay for their services. But I still want to be more educated as a leader. So this was very, very helpful. Thank you both for sharing your knowledge.
Thank you very much for taking this time that you are sharing it with the community. I didn't know that you have got this forum. From here on, I would like to be involved, and thank you very much. And bringing Tony, really very good. He's a very good friend of mine for a long time, and I bow to him.
Alex, we go back a long time. You know how much I love you, like a brother. So honored to any time to spend time with you and give back to this community. Been very blessed by it and want everybody to be successful.
Does anyone have any questions for our speakers or anything before we leave?
We're okay.
No, we're good. All right. Just before we leave, somebody just asked me to share the information about the grants. So I'm going to put that in the chat right now. And you can have that, or if you didn't get it, you can call me and let me know, and I'll be sure to get it to you. But otherwise, I hope everyone has a great day, a great week, a great month. Holy Week is coming up, so we're going to pray for every person, and we will see you again in April with another great and amazing topic. So thank you so much, and everybody have a great and blessed day.